It's not the president that is tasked with the balancing act of maximum employment and tackling inflation, it's the Federal Reserve. But unfortunately, most Americans do not even know how the Fed works. I'm using 1440's Business and Finance newsletter to explain how the stock market works and why it's moving. Today, we're talking about interest rates and the Fed. The Federal Reserve is an independent, bipartisan, and self-funded. There's oversight by Congress, but the Fed sets what is called the Fed funds rate, which has an immediate effect on your high-yield savings account, your loans, your business loan, mortgages, all of it. The Fed funds rate is the rate at which banks borrow from each other. A lower rate means more borrowing, which means more access to reserves. And if banks have more cash, they can lend out more, which means you can borrow more. That's what we like to call a loose credit policy in the finance world. You have access to cash because the banks do, and the banks have a lower rate to borrow, so do you. Inflation is normal, too much or too little is not. Generally, inflation happens when consumers are strong. That's you and I. We have a lot of cash, so we spend it. So the Fed tackles inflation by slowing down the spending. We call this slowing demand in the finance world. The Fed would raise interest rates, making it harder to access cash. Remember, the Fed sets the rate for the banks, but the Fed's influence has a rippling domino effect across all other rates. When they raise rates, it should cost more for your credit card. Mortgages will be higher, car loans will be higher, your expenses will go up. When your expenses go up, you should stop spending as much. Then corporations will stop rising prices as quickly and inflation will normalize. Borrowing costs are higher for corporations too, which is why the stock market does not necessarily like a restrictive Fed, which just means the Fed's raising rates. That's what a restrictive Fed is. The Fed's actions also have an impact on the yield curve, the US dollar, and has a deep history you can explore for hours. 1440's Business and Finance newsletter and content goes an inch deep and a mile wide. You can read what the writer learned about this topic and explore vetted resources about the Fed and other finance topics. Check out 1440 Business and Finance and sign up for their newsletter. And of course, comment your questions and follow to understand more.